Amisha Vora, Group Joint MD at Prabhudas Lilladher now joins us. Amisha ma'am, thank you so much for joining us this morning. Just wanted to understand what do you make of India, the outperformance that we have shown. Will that continue? Is that telling us that we are still undervalued or a lot of money is still lying on the sideline to be invested into India?
See, one can definitely say that the earnings have bottomed out. But because the earnings are at trough, the valuations are not looking cheap. So we cannot say because the markets are looking very cheap, a lot of money is coming. Rather, we are enjoying one of the highest premium to MSCI, countries within the basket at any time that we have enjoyed. But also the fact is that our growth prospects, our domestic economic dimensions and macroeconomic factors are much better than most of the other countries. So yes, we have been a bit outperforming of late, but I would rather say that we are more among the stable part. And if you ask me, are a lot of money waiting on the sidelines? No. Most of the portfolios we are overweight. So I don't think we will still continue to attract disproportionate money, but whatever is the flow in emerging markets, we will definitely be a party to that.
Right. As far as the positioning in India is concerned, you think it's still a very, very highly overweight market? Any risk of trade could lead to very big withdrawals?
Overweight definitely on India is high, and a risk of trade will not lead to a panic correction, I feel, because amongst the others, India is pretty much stable, both from probably currency as well as economy perspective, comparatively. So there will not be panic selling, nor do I expect any major emerging market outflows and immediately any risk-offs. But yes, over next 6 months, there are 1 or 2 events lined up which can lead to risk-off, and we will be party to it.
Right. As far as mid-cap, the outperformance over there is concerned, you think that will continue?
That I feel should continue, because when typically you find that market is stable or maybe range bound, then the place to really make money is stock picking, mid-caps, also at a time when broader, more sectors are about to participate because of onset of right monsoon, or because of also like this pay commission money likely to come, then more participation from different sectors will keep coming. Also, one by one over last 2.5 years, if you will see, a lot of moves of many sectors have been sorted out. So if we take off roads, if we take off power transmission, if we take off particularly anything related to coal and power, not completely the railways problem has been sorted out, but a lot of things have been unwound. Mining, so the ripple impact in the economy was there, monsoon was curtailing it, but with now monsoon on, we will see little improvements all round. So I think yes, the mid-cap portion will continue.
Right. As far as some of these companies like SKS Microfinance, Ujjivan, Equitas, which have got recently listed as well, will they continue to show the growth rate that they have? You think microfinance is still a space which is in a sweet spot?
I think so, that the growth in microfinance will continue because A, the penetration is still very, very limited, and there is good scope for increase in penetration. And as this supports the individual rural incomes, the more people would be inclined to use this mechanism to help grow their living or help grow their means of living. So I think yes, 30% kind of growth is very much possible.
Right. And would you be a buyer into these names, or now you think valuations are also looking stretched? So just wait for a bad day where you see a risk off globally, you get a 5-10% decline and you would want to buy these names?
Yeah, those will be ideal ways to accumulate for medium term, that on any bad day, you better look at declines. So buy at declines would be the right strategy in some of these names, definitely.
Right. How would you look at the consumption story? We have the pay commission meet today from the cabinet side. We plus are getting very good monsoons, or at least initial signs seems to be that it's broadly in line. Do you believe that consumption space is already factoring in that, or the growth could be much higher than what the street is looking at?
But consumption space is so wide, varied, and there are different kind of plays available, right from fan and consumer electrical to plywood and laminates to going to ACs or right up to two-wheelers. So consumer space in India is very wide. Different kind of plays are available, and apart from monsoon and pay commission, GST will turn out to be a very big trigger in some of these in terms of their logistical cost, in terms of the unorganized competition gradually coming down. So I think this space still continues to look the best place to find your choice or your selection of stocks and ride for next 2 to 3 years.
Right. As far as something like a consumer durable space is concerned, so something like a Havells, maybe a Whirlpool or a Voltas, that is looking more interesting than the traditional consumption names?
And what do you say is the traditional consumption names are?
Probably something like a HUL or Dabur or Marico.
Yeah, from fast moving consumer goods as compared to that, we think that the durable space is better position, both because fast moving has some new entrants and little competition, as also when you get little bulk of the money and slightly better income, maybe that you will not suddenly start brushing your teeth twice, but at least you will go and buy a mixture or one more TV. So we think that the consumer durable place is probably going to be much better as compared to if you have to choose between the two. Yes.
Right. As far as autos are concerned, will they also benefit, at least the two-wheeler names, if not as large as something like a Maruti?
No, I think both in terms of demand, both two-wheeler and four-wheeler should benefit. But if any particular company has some cost and currency related issues, then it will reflect in EBITDA. But overall space-wise, yes, over next 3 years, both this space should benefit.
Right. Going ahead, how would you look at the cement pack? Now, that's one space which 2 to 3 years back nobody was liking. They were talking about excess capacity, a lot of these companies having a lot of debt. But suddenly in 2 to 3 years, stocks have gone, of course, much better than what they were. But even the industry, the way industry was operating, all of it has changed. You think that it is getting a much more steady business than what it used to be?
So, but see, in last 3 years, for example, cement companies who were showing EBITDA per ton of say between 1200 to 1400 came down to between 600 to 800. So the pain in terms of maybe excess supply or low consumption or low demand is reflected in their financials. Now the enthusiasm is coming back, because the demand have started coming back. There is a little growth which is visible in numbers sustainably over last 3, 4 or little more months. It has also led to a little recovery and pricing and prices and pricing discipline. And above all, for next 3 years, the supply which is coming in is not so high. So the margins will definitely improve year after year and quarter after quarter. Broadly is the feeling which has been coming up. Of course, market is bit advanced discounted, but it will continue. The stock after having a small or a good run may show little more run, then may consolidate during monsoons and once again get ready for the next rally. But we are in the camp who believes that this is a good sector and the profits will continue to rise over next 2 to 3 years.
Off late, Amisha, a lot of focus in the cement has been on different regions as well. So south-based cement companies, maybe a west-based cement company or a east-based or a pan-India player. You think these mid-cap companies in the cement pack, region-wise, where the demand continues to be strong, is something that would actually give more delta?
But if you see, quite a few of them have substantially gone up, but and there could be little more scope, I don't deny, in mid-cap cement, but one definitely needs to see two things, that if we compare their EV per ton to some of the large players EV per ton, then it may not be the right thing to do comparison on that basis, because some of these small players capacities may not be as modernized, their cost structure may not be as good. So I think we should refrain from giving those standard multiples, but yes, the profitability growth in smaller companies and slightly more leveraged companies will be much higher than some of the large ones, because they are not as leveraged, and all of them will start throwing cash. So definitely there is still scope in that place.
So, if we are talking about leverage, Amisha, one sector when you talk about leverage comes to the mind is the real estate pack. Today we have a very big, newspaper report which suggests that DLF may be looking to wipe off its debt. Companies like Godrej Properties, Oberoi Realty, which are not known for taking the debt, have done very well. So, you believe that the 7-8 years pain that these companies have had will essentially, it will start to change the way they operate. They will start to focus on delivery. They will start to focus on execution versus, just acquiring more land and building more construction.
That is very clear that acquiring more land is in nobody's agenda. If you ask me, top 10 companies in real estate, nobody wants to acquire more land. Rather, in terms of execution also, if I understand their strategies right with my interactions, they want to go a little more slow, take up couple of projects, complete it, then take up. So the earlier strategy, open more projects, take bookings in more projects, and then use the cash flow. All those strategies are strategies of past. With RERA coming in, with the slow offtake, as also the debt burden, the way it has pained them, I think their strategies are completely changing. But I will just qualify as far as my understanding is concerned, particularly in DLF, the development side of debt will be made, will be reduced substantially with promoters' infusion. But since it has a very large portfolio of rented properties, so in that rented property, debt will continue.
Right.
But still, it does show that promoters are realizing the fact that the demand is not going to come back in a hurry. So better to get rid of the debt by whatever other resources, or by selling of non-core or a part of the core, but repay the debt.
Right. Amisha, thank you so much for taking out time for us. Hope you have a great day.